You're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Friday. Despite lingering risks from the pandemic and inflationary pressures, the country is now on its way to full recovery. That's according to the Bangko Sentral.
Now, with supply chain issues and higher fuel costs hampering production, the manufacturing sector posts its slowest growth level in over a year in the month of April.
The 55-kilometer Manila to Calamba South Commuter Railway project obtains a $4.3 billion financing from the Asian Development Bank.
And the Philippine government hopes to net at least $150 million worth of investments from Israeli businessmen this year. We begin our broadcast with Bangko Sentral Governor Ben Diokno expressing optimism that the country is now on its way to a full economic recovery.
This as he expects growth to further accelerate in the second quarter. Diokno says the government target of 7 to 8% growth for 2022 is doable, with the GDP expected to expand much faster in the April to June period. Recall that the economy grew by 8.3% in the first quarter, stronger than what economists had expected. Diokno, who is set to become the next finance chief, says that the Bangko Sentral is also prepared to respond to growth risks, particularly a sustained buildup of inflationary pressures and second-round effects. This as analysts expect higher daily minimum wages and public utility fares to drive inflation beyond the Bangko Sentral's 2 to 4% target for 2022. Inflation jumped to 5.4% last month, bringing the year-to-date inflation to 4.1%.
The Bangko Sentral is targeting to launch a news sentiment index next year as it seeks to ramp up the use of big data in its monitoring activities. Now, outgoing BSP Governor Ben Diokno said the NSI would capture relevant views or sentiments on key macroeconomic events that may affect the current and emerging economic and financial environment. The NSI project involves the development of software that will instantly gather information on consumer and business sentiment from online news sources. Diokno said that to ensure that the index accurately captures overall economic sentiment, only news from financial and business sections of media outlets will be included.
And this just in, the unemployment rate in the Philippines has slightly eased to 5.7% in April. That's from 5.8% last March. This means that the number of Filipinos who are jobless has decreased to 2.76 million from 2.87 million in March. The April figure is also a huge drop from the 8.7% jobless rate recorded during the same month in 2021. As the economy continues to recover from the pandemic, Fitch Ratings in its most recent report revised their outlook on Filipino lenders from negative to stable. But is that under threat with high levels of inflation? Tama Febrian, Director of Fitch Ratings Asia Pacific Financial Institutions, is here to answer that. Good morning, Tama. Thank you for joining us today.
Hi, thanks for having me here.
Again, in your report, you noted how loan demand will continue to improve throughout the rest of the year. But how is the current high level of inflation going to impact that? And by how much do you still expect loan growth to continue to accelerate?
Yeah, so I think the impact of inflation on the credit demand will be a little bit uneven across sectors, right? And I think in terms of the magnitude of the impact, that will also depend and heavily influenced by the monetary response, the monetary policy response that the BSP is intending to do. So if we are looking at, a very aggressive response, then, what we're probably going to be seeing is that some borrowers, particularly, let's say people want to buy houses and also some of the corporate borrowers, they probably want to opt to front load their loan requirements and to secure some of the cheaper rates, temporarily boosting loan demand. But I think on the overall, long-term view, basically this an elevated level of inflation, if it's prolonged, we think that the impact will be negative to the overall loan growth. as higher input costs and borrowing costs will basically impact the revenue outlook as well as debt servicing capacity of the borrowers. Now, the thing is, right now for our base case scenario, we are looking at the inflation level tapering by the end of the year and going into 2023. So. We are also only expecting some sort of a gradual normalization in policy rates. So in this particular scenario, we don't think that the impact on the loan demand will to be very, very material. And also, I think the economy is strong enough to withstand and absorb some of the impact from such level of inflation.
Okay, now Tama, you did also mention in your report that the asset composition of the banks is actually well positioned for rate hikes. What do you mean by this? Won't the margins be squeezed?
Yeah, so I think if you take a look at the mix in terms of those that are on floating rates and fixed rates, so I think a lot of at least the ones that we rate, more than 70% of the bank loan portfolio are actually on a floating rate. So which means that whenever there is going to be a revision in the policy rate, it's very likely that they may be able to kind of reprice some of these loans, right? And with the liquidity conditions remaining relatively quite liquid, I think in general we are expecting some sort of an increase in margins for the rest of the year should policy rates continue to increase. And this has kind of been corroborated as well by a lot of the banks in an early part of this year during their earnings calls. And I think that's going to stay.
Okay, is the growth in loan demand mopping up the excess liquidity that is circling in the markets?
Yeah, I mean, I think to a certain extent, yes, it will be, but we are looking at a liquidity that is, almost on a record high, right? It is very high. Loan to deposit ratios are in all time. It is at 70% right now relative to 80% back before the pandemic. So there is still a lot of those right now. So a tightening in liquidity is actually relatively quite good in terms of the margins because there's, in a way, there's more leeway for banks to reprice some of the loans. So in a way, I think margins will be supported under that kind of scenario.
Now, Tama, again, you also revised your outlook here on the financial operating system of the Philippines from negative to stable. However, you retained your outlook here when it comes to issuer default ratings at negative. Why is that, and how much of that outlook is hinged on the bank's credit profiles as opposed to sovereign support?
Yeah, so right now, in terms of the bank's ratings, they are driven by our expectation of sovereign support. So in this particular instance, the key input to that will be sovereign rating, right? So this basically means that the bank's ratings are not driven by standalone credit profile. So the revision that we did in terms of the operating environment, that will not have a material impact on the bank's rating outlook right now. It will basically mean that there is a less downside risk on their standalone profiles. Whereas for their headline ratings, which is their issuer default ratings, this will continue to depend on the sovereign rating movements. So if there is a downgrade in the sovereign rating movements, the bank's ratings are likely going to be downgraded as well. But on the upside, if the sovereign ratings are actually stabilized, then we will also see a similar kind of revision on the bank's rating outlook as well.
Are we expecting also an upgrade or at least an improvement here when it comes to sovereign ratings, considering the level of growth that we posted in the first quarter? At the same time, you have the central bank already on an unwinding mode.
Yeah, I really can't speak on behalf of my sovereign analyst, but what I can speak is that I think it is an encouraging sign that the macroeconomic performance is something it's relatively quite strong. Going forward, and we do want to see how whether or not there is still some sort of a scarring from the pandemic, and whether or not this inflation dynamic will continue to remain some sort of a persistent feature, which could dampen some of the economic growth potentials going forward, right? And beyond that, I think the sovereign team also flagged on some of the the economic policy agenda, as well as this fiscal consolidation plan that the new administration is thinking about doing. I think right now it's still quite evolving, right? Things are still in transition. So I think it's something that we are closely watching at, and will probably determine on the trajectory of the sovereign rating going forward.
Okay, but in terms of that, just to nuance that a little bit, are you flagging still a risk in terms of the debt to GDP ratio above, let's say, the threshold of 60% psychological barrier, and whether or not we will be able to pay that back or reduce that with the current policies or the fiscal consolidation plan that the government is touting?
Yeah, again, I think this is something more of a sovereign rating kind of a question, but I think based on what I understand so far, and I think at the current level, they are quite concerned where they are at, and I think they would like to see, some sort of a consolidation going forward, and some sort of a decrease in the debt level going forward, and that will definitely depend on some of the new policies that the new administration will probably enact. So the fact that right now it's still a negative outlook, I think I would say that I think that the team is still relatively quite concerned about that.
Okay.
Okay, I actually had one more question on the RRR liquidity cut. What good would that do? Let's say, since there's, as you mentioned, quite some liquidity already out there, and there's risk of even more inflationary pressures if there's too much liquidity not mopped up by loan demand.
Yeah, so I think a cut in reserve requirement would generally be would mean that it will free up some of the unproductive assets that the banks are holding, right? Because I mean, basically they're just sitting there in BSP, not earning any interest rate. So to a certain extent, if they were able to make use of that and actually channel that to a more productive assets, like let's say loans or investment securities, then that will aid increase their interest income and potentially margins. But again, based on what I understand, we don't really expect the BSP to aggressively cut the reserve requirements rates. I mean, like I mentioned earlier, there's still quite a bit of excess. There's really no need for you to be too aggressive on that particular front. So that means that I think any benefit to profit will likely be quite modest for the banking sector.
All right, no need to be aggressive when it comes again to cutting RRR. Thank you very much for your insights this morning. Again, Tama Febrian, Director over at Fitch Ratings, Asia Pacific Financial Institutions.
Yeah, thanks for having me.
The Asian Development Bank has approved up to $4.3 billion in loans to finance the construction of the South Commuter Railway project. The 55-kilometer railway will connect Metro Manila with Calamba, Laguna, and is part of the North-South Commuter Railway network. The ADB says the South Commuter Railway project represents their biggest infrastructure investment to date, which reflects their commitment to help the Philippines attain its goals of reducing poverty and achieving high economic growth. The railway project will be financed under a multi-tranche financing facility, with the first tranche of $1.75 billion to be available starting this year, while the next two tranches are expected to be released in 2024 and 2026.
Now, April factory activity eased to its slowest pace in 13 months. This comes on the back of manufacturing firms grappling with higher production costs due to supply chain issues and soaring fuel prices. Preliminary data from the PSA show that volume of production inched up by 3.4% in April. That's lower than the revised 352% growth in March. The country's imports also grew at their slowest pace in 13 months, while exports slightly picked up, causing trade deficit to narrow month-on-month in April. UANP senior economist Sid Terosa says this is reflected in the global market jitters, or these are the global market jitters arising from the Russia-Ukraine war and the lockdowns over in China. Security Bank's Robert Dan Rosses said the Russia-Ukraine war elevated inflation and coronavirus lockdowns were downside risks to the country's trade and manufacturing outlook.
Incoming Agrarian Reform Secretary Conrado Estrella III admits that bringing down the price of rice to 20 pesos per kilo is not feasible for now. Despite this being a campaign promise of President-elect Bongbong Marcos, Estrella says this is not possible at the moment considering the rising prices of fuel. Still, Estrella vows that they would work hard to achieve this goal.
Yung 20, mukhang sa ngayon, medyo mahirapan pa tayo considering alam mo naman yung presyo ng langis ngayon. Pagkatapos yung presyo pa ng abono. Ako, siguro 27, 28, pwede na yan. Oo. Pero yung 20, talagang pag-aaralan ko ng gusto yan. Pag-aaralan namin ng gusto. At talagang magsusunog kami ng kilay.
Even incumbent Agriculture Secretary William Dar admits that bringing down the price of rice is a huge challenge, especially with the ongoing war between Ukraine and Russia. Dar says that instead of becoming cheaper, prices of rice could even climb by up to 6 pesos in the fourth quarter due to higher production costs. One of the solutions eyed by the agency is the resumption of selling NFA rice at 27 pesos per kilo. Dar says this is possible if the budget of NFA will be increased so that it can also hike the availability of its buffer stock to 30 days from the current 7 days.
Ito ngayon yung ilalabas sa merkado by reviving the NFA retail outlets. You know, NFA is selling 25 pesos per kilo, so dagdagan ng 2 pesos ng retailers. So for the poorer segment of the society, itatarget natin muna na mag-benefit yung mga 4Ps.
The Philippines may gain around $150 million worth of investments from Israeli businessmen this year. This as the two countries signed an investment promotion and protection agreement on Tuesday. The deal with Israel covers investment protection elements such as national treatment, free transfers, and investor-state dispute settlement. The two countries have also formed a joint economic commission that will explore pathways to improve trade. Outgoing Trade Secretary Mon Lopez added that solid letters of intent were signed and presented to the government by Israel investors in agribusiness, software development, and IT BPM. There were also inquiries on food and beverage, satellite images, and water desalination and treatment.
Cryptocurrency exchange Binance is in the spotlight. The United States Securities and Exchange Commission is now investigating whether the company broke securities rules by selling its BNB token just as the crypto exchange was getting off the ground 5 years ago. Bloomberg's Joanna Ossinger breaks it down for us in this report.
This review is looking into Binance's origins and those of the BNB token, which is now the world's 5th biggest. So it's a huge token. And they're basically looking at whether the initial coin offering was a sale of a security that should have been registered with the agency. And this is according to sources. And that could really be difficult for Binance because it's already, fending off a number of investigations in Washington, and they're looking at a number of things related to the beginnings of what Binance did and how it handled it.
Is this idiosyncratic to Binance, Joanna, or are there broader implications for the wider crypto world?
There are definitely implications for the wider crypto world. We also have Ripple that's embroiled in a fight with the SEC about whether that is a cryptocurrency or whether it's a security. And so this is just one more thing that shows that regulators are really looking at the crypto industry and going back a few years to see what they have been doing as well. It's not just what you're doing now, it's what you have been doing. So it could be something that is an issue for a number of these companies that may have started several years ago and may have, done things that they didn't necessarily know at the time were issues.
So, Joanna, could they just get a fine, or could this actually change the way they operate and do business?
This could actually change the way they operate. They're also looking at it with this investigation. It's reportedly whether Binance US is sufficiently hived off from Binance overall. There could be a fine. There could be all sorts of things. It's a little bit tough to tell.
Pausing for a quick break, but coming right up after the break. PSE President Ramon Monzon confirms to Businessworld Live that the PSE board has approved a plan to cease physical trading at its Bonifacio Global City headquarters.
More of that and other stories when Businessworld Live returns. Stay with us.
And you're still watching Businessworld Live here on One News. I'm Jess De Los Santos.
And I'm Dani Laurel.
All right, Dan, before we check on the index open, you have some news to share straight from the president of the bourse himself. Tell us more about the now normal.
All right, Jess. Well, this, as you mentioned, relayed to me by the president of the PSE, Ramon Monzon, in an event last night. Jess, say goodbye to the physical trading room over at BGC's PSE Tower. And here to stay is virtual trading. So the PSE board just approved the ceasing of operations of their physical trading floor. He also mentioned to me, we are still one of the few countries, Jess, with this physical trading. Even the New York Stock Exchange pala is virtual na ngayon. But there will still be an area for the ceremonial bell ringing, but they will be consolidating the people into different floors and leasing out that space. Right now, there are around 90 booths for the stockbrokers in the floor, but many of them have preferred to continue to work from home. So I guess we have to get used to the Zoom bell ringings. That is here to stay, Jess. Now, let's keep an eye out on the opening of our bourse because we are down by close to 2%, 6,600 levels yet again. You know, quite some risks on the table here. Apart from all of our domestic issues here on inflation and the prices of goods, we do have some things offshore that investors or traders are looking at. First of all, you're going to be seeing the inflation print over in the U.S. released later today. Our time, the expectation is 8%, much higher than ours. And we also have COVID zero policy continuing over in China. Chinese President Xi Jinping called on his government to adhere, quote, unwaveringly to those policies. And you can see, of course, some of our movers here and which ones are dragging down the bourse. I'm going to take out the one-day chart for you guys. MPIC, biggest loser at the moment, down by 2 9/10%, followed by Ayala Land, Meralco, and ICTSI. So again, a mixed picture here. Emperador, however, let's say not losing out. It's the only one not. And a couple that we might have to watch out for in the next few months at least. This as the PSE changes the plans or the required float to 20% from the current 15% by the December review. You've actually got 3 companies to be watching out for in the index. That is San Miguel, AC Energy, and Emperador. Right now, they all have floats below 20%. The AC Energy CEO Eric Francis said that the percentage did increase. Ramon Ang of San Miguel said he's checking on the company's float. Emperador, no comment so far. And I do want to take a quick peek at our solar players here, Jess. This as there's more intel on what billionaire Razon plans to do with those solar plants. He does want to avoid burning 1.4 million tons of coal by, of course, having a up to 3,500 megawatts of solar panel, and apart from that, battery storage. That's around 930,000 liters of oil that he will be displacing via this project. Now, very interestingly, this will be a project in partnership with Solar Philippines. And let's take a quick peek at SPNEC. That's actually down by 1.19%. In the past few days here, but of course, you know, that has already risen yesterday by as much as 3.6% on the back of that news.
E-commerce startup Grocery is eyeing to have 300,000 partner stores by next year. That's part of its efforts to boost its presence in the country. Now, aside from this, Grocery also aims to transform small physical retail stores like sari-sari stores across the country into comprehensive service hubs for their communities. Grocery said the startup is aiming to reach underserved areas outside metropolitan areas.
The International Finance Corporation, or IFC, is providing $8.3 million, that's about 440 million pesos, to EdgePoint Infrastructure as investment in the telco tower platform's entry into the Philippine market. The indirect equity investment aims to improve the country's mobile network capacity and create a competitive market. The IFC says the amount is part of a larger investment in digital infrastructure assets across emerging markets managed by the affiliates of U.S.-listed Digital Bridge, which includes EdgePoint. This investment also involves the acquisition of over 2,900 PLDT towers through a sale and a leaseback agreement.
And that's a first look into the business day this Friday, June 10, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. Happy weekend. We are One News.